Welcome to another CEO Wisdom Pod. We have Scott Tivey with us today, CEO and co-founder at Payometry. We're going to have a nice talk about fintech and Scott's background, which is quite impressive, and what he does as well. We're going to talk about my experiences with Stripe and Square and so forth, and chargebacks, which have been quite a problem for many business owners in the last couple of years, and how Scott is optimizing that. So Scott, welcome to the pod. Tell us a bit more about yourself, your background,
Thank
and
you.
Payometry.
Sure. So I started my world in the payment space as an Oracle database and systems architect and designer. I worked for, at the time, the largest magazine marketing company, so specializing in the continuity subscription-based model and all the things a merchant can do once they've acquired a customer, right? Because it's hard and expensive to find a customer, but once you've got the customer, it should be relatively easy, cheap, and profitable to keep them. And so for 12 years, I basically did all of that design work for them. Moved on to become a payments consultant and a partner at another consultancy where, again, we specialized in the continuity subscription-based merchants, but also, looking at their systems and functionality. In 2011, I decided to leave that partnership to start a company called Card Not Present Solutions, which is the company today that we call Payometry, and the technology platform that we built all around those special bespoke services that we've offered since then.
I want to start with something that's quite of actuality, which is like big media and their decline. There's a lot of talks with that, with Elon Musk's interview with BBC, the reporter and journalists, that sometimes don't have their value straight or whatever. But what's related with your industry is that I'm not sure when exactly. I think 2 years ago, I subscribed to New York Times, and to unsubscribe, I literally had to call them, which I thought, man, is so archaic and frustrating as a customer. It's like the only company that did that, and they're big companies. So you're talking about continuity when it comes to subscription. What do you think about that practice, and what are the best practices, generally speaking, to keep a loyal customer?
Yeah, so there's a lot around that. So to start, right, the way these merchants have acquired and got new customers to sign up for their services, not just over the last couple of years, but probably the last 2+ decades, is a function called negative option marketing. And so that's your prototypical free trial, try it for a couple of days, a week, or month, or whatever. And at the end of that trial, if you don't proactively cancel, then you agree to automatically be enrolled into the subscription. And most people will say, sure, I'll try anything for free. And so that's a great tool for the merchants to get customers. The problem becomes is most people, they don't read the terms and conditions. They don't really listen to everything that's explained to them. All they hear is try it for free. And then all of a sudden their monthly credit card statement comes and whoop, there's a charge, which then drives calls to the merchant, hopefully, or worse, calls to their bank, right? As a merchant, listen, you try everything you can to keep the customer. And if you're going to cancel, or worse, get a refund, you want them to call your customer service, right? Because you want to handle that. Because if they call their bank and say, this was fraud, I was scammed, I don't recognize this transaction, the customer and the bank are going to levy against the merchant what you had mentioned was called a chargeback. And in our industry, for merchants who have so many chargebacks per month and a percentage based upon how many settlements, how many approval transactions they get, they pay fines and fees and can get into some really serious trouble. And so as from the merchant's perspective, listen, you want to be clear with billing descriptor. You want to have your 800 number for your customer service there. A lot of merchants today are putting URLs in the billing descriptor line so the customer can go to a website to self-serve themselves. And this became a really big problem for the industry, so much so that the card association, so the Visas and Mastercards of the world, actually have regulations built into their 1,000 pages of regulation that basically state a merchant needs to make available to a customer a way to cancel or get a refund in the same manner that they were acquired. So what that means is if you went to a website to sign up for something, you should have a web-based customer service portal or function to allow that customer to cancel. Um, so yeah, it's a big problem in our industry.
Yeah, I have so much to follow up on that. First, I was using Stripe a couple of years ago. I've started various ventures, but I've got one clear lessons, and it's the closer that you get to B2C or slash to people with low money, the higher you are at risk with chargeback. Because I've got, I think it was a couple of years ago, I got a chargeback rate that was around 1 or 2%. The reason was, well, first the product could have be better, right? And my CS, so that was early in my career. But moreover, like the bill, the statement that they would see on their credit card was from a company of mine that was registered in Hong Kong. And the name wasn't like familiar to them. So they were like, "What the fuck is that?" And they called their bank and immediately cancel. That was a good part of it. Another part of it was literally fraud, you know. So they were like, okay, yeah, I'm just gonna cancel that, gonna have an extra bucks. I was targeting realtors. So lesson learned, because after some time, I got a message from Stripe and they decided to boot me off the platform. Now I'm back on the platform, obviously, but
Yeah.
it was quite stressful for my business. That's one. So lesson learned on that. Two, I think the chargeback process is really not fair. I don't think it is a good philosophy to promote consumers over businesses, because in the end, businesses are the fabric of society. Entrepreneurs are like what makes this society better in pretty much all shapes and forms, not only from tax dollars, but from what they create. So that one's more of a philosophical and political matters. But from a business standpoint, I think the Visa-Mastercard duopoly is completely ridiculous. I do think they're going to be replaced in the next couple of years. Obviously, they partner up with front end banks, or I forgot how you call them, like Mercury and so forth, which are really exciting businesses. But yeah, I think this is gonna change, and I think they should include some blockchain process, and with AI, if you talk to me right now, to actually determine if a business is fraudulent or not, or if the consumer is fraudulent. Because if you have a consumer that's fraudulent, well, imagine what that does to your business. Do you think that consumer is gonna pay back his bills? Probably not. He's an asshole, and he'll try to scam, and he only matters about himself. So me, I'm super determined to invest in startups that are kind of changing that, and are taking these matters in my own hands. We've also seen that banks are kind of shaky, but that's another topic. So from a chargeback perspective, are we seeing startups that are changing this model, that are favoring a bit more the business? And I already have a part answer to that, which is yes. Square, which is another payment processor I've been using, they're really friendly to businesses. And so much so that Jack Dorsey got into trouble recently. Not sure if you saw the report against his company, Block, but that made the stock drop like at least two times. And yeah, but I really love Square because they're really friendly for businesses. So with all of that being said, what do you think are the trends in the business? Is the chargeback process changing? How are things getting better?
All right, so you threw a lot out there to unpack, and you actually hit upon a bunch of really, really good topics. So first, we were talking about, when the customer sees their billing descriptor, they think it's fraud or it's a scam or whatever because they don't recognize it. So there are some best practices when we work with a client, if they have chargeback problems around their billing descriptor. And it really comes down to one of two things. The answer is one of two things, but the only question we really need to ask a merchant is, how does the customer recognize what you just sold them? Is it at a brand level, like Nike, or is it at a product level, like Netflix is a good example, right? Even though it's the same brand, but they understand when they see Netflix on there, they understand the product that they bought, right? Comparatively, if you went into a store and used your credit card to buy, or you went to like a gym subscription, something of that nature, where you were upsold like a premium package or a spin class, and it just came through as 24-hour fitness, right? When you look at that, you probably will link, oh, that's the spin class at 24-hour fitness, but you may not, right? And so that's one of the questions we ask client, is to kind of be very clear on what product or service or brand does when that customer sees, or when I was a magazine marketer, perfect example. We were purchased by Time Inc., right? So a big publisher with a lot of titles. We quickly realized that our descriptor should say People Magazine, not Time Incorporated, right? Because yes, it's still Time, the company, the publisher, the brand, but the customer knows the product. I bought People Magazine. But that's one. The other thing you touched upon was some stuff about the chargeback process. Makes sense. And what's really the problem that's hit on the industry is what's called friendly fraud, right? So friendly fraud is the scenario where the consumer purchases a product or service, they consume that product or service. So they watch Stranger Things on Netflix, they read People Magazine, they consume the content. And when the bill comes, they're like, yeah, I recognize it, but I'm just going to call my bank and say this is a scam to kind of get my money back. So they've kind of already, especially in the hard goods, the Hello Freshes of the world, right? They've eaten the food. And then once they get the bill, they call the bank saying, I don't recognize this. I never got, my pork chops this week. And lo and behold, the merchant gets hit with the chargeback. So that process, and even when, this is one of the things that really bugs me about the industry. So I talked about before how each month a merchant has, a number of chargebacks and the ratio of their chargebacks to their approvals, right? And if that ratio is over a certain percentage and it's 0.9 for, Visa-Mastercard, they can get into trouble. Well, there is a function available to the merchant called a representment. And so the process really fast is customer calls their bank, says, hey, I don't recognize this charge. This is a fraud. The bank levies that charge back against the merchant. The merchant is notified, hey, this customer is claiming your fraud. Can you prove, right? And it's very hard for some of these merchants, depending upon, right? They might not have a physical signed order form, right? Or a receipt. Sometimes it was online, and that the best they have is, the consumer's IP address. Again, not all perfect proof. And listen, there are companies out there that provide that kind of service, and they do a fairly good job of winning a percentage of them. The problem is, even when a merchant proves, yes, this is the customer, this is their order form, this is their mother's maiden name, this is their dog's favorite food, right? They have all this evidence and they win. The chargeback still counts against them. So that's a problem as far as I'm concerned. If a merchant is able to prove, and the bank agrees, this wasn't fraud, this was a legit transaction, that chargeback should not count against them, but it does. And like you mentioned, there are companies like Stripe who try to help in those areas to some degree. There are what's called interception services. Visa bought a company called Verify. MasterCard bought a company called Ethica. And their kind of offering is, before the bank actually levies the chargeback against the merchant is notified kind of in advance of that function and has the ability to immediately refund the customer. Because think about it, from the bank's perspective, all they care about, and you said it right on the head, they care more about the consumer than the merchant. And so they want that consumer to get that refund, refund placed on their card. And if the merchant can do that in a timely manner, then the chargeback, magically goes away. I think it's a half a step in the right direction. The services are very popular. Because every merchant who has any kind of card on file, they're under attack. They really are. It doesn't matter if you're a startup or even a well-established. We have some merchants that are billion-dollar companies, and they're getting hammered with chargebacks because they just have an offering where the consumer can take advantage of them, that they're not trying to scam them or defraud them or be kind of loosey-goosey with negative option marketing. I mean, they're pretty upfront with, hey, this is the product, this is the service, you pay for it up front. The trial, they're still out there, but the trials have fundamentally gone away, or it's a paid trial, right? Instead of it being, $29.95 for a month, they'll say, try it for a month for, $4.95, that they get some sort of a payment up front. That's very reduced.
Correct. And
So
I think, it comes down fundamentally to psychology. know your customer, well, in my case, and the more you try to scale, the more you try to automate and forego the process of knowing who's your customer and having that buy button on your website, I think the more you're going to have. Now, it also depends on the price, right? I ran various companies over the years, and some people, they would order my supplement, for example, with stolen credit cards, and then they would charge it back. Not sure how they did that, by the way. Oh no, yeah, the guy that actually got his credit card stolen, he charged back.
Sure.
So that was like double whammy against me. And yeah, I think it's kind of frustrating, and that's why I'm still a strong believer in crypto. One thing that I don't like about banks is that, yeah, they keep much of the information for themselves. And I think it's fundamental for a healthy society to share information and to talk about this thing called bank runs, right? Like it happened at SVB and so forth. And from a consumer side, people doing these frauds, it's kind of elevated the number. It's like normal people that just struggle financially. They go paycheck to paycheck, and they're like, oh, I need $300 to pay that now, so I'll just charge back this and I'll figure it out later. And we have all these talks about AI, and like AI and AGI is gonna pick up on our human values, and that's the main worrying part about society. It's that we don't give the right example to this thing that's going to be more powerful than us. But that's an entirely different topic. With Stripe via Square, what I found out back in these days, and Stripe, they've gone better, right? So I'm pretty sure everything is better now, and they're a cool company. I still like them. But with Stripe, I used to lose probably 80% of my disputes, which is super high. And a bunch of them, like I said, were not justified. Maybe like 10% were justified in the end. With Square, I'm winning 80%. So there's this big bias, and obviously it's like a different set of banks and so forth. The Square one was in Canada, Stripe was in Hong Kong. So I'm just curious, in the current ecosystem of things, what can I do to first prevent these chargebacks? Is it like knowing my customer, delivering a good service to them? And then what can I do to win a chargeback is the second question that a lot of business owners will have.
So I'm going to get a little cheeky on you for a second, right? Because I actually say this to clients, and probably 50 to 60% of our clients come to us with some sort of a chargeback problem. So this is something we deal with every day, multiple times a day. A lot of times, they'll ask me the question, how do I reduce my chargebacks, or how do I eliminate my chargebacks? And I say, okay. And I laugh and I said, do you want to know the real answer? And of course, they're like, yes, yes, yes. And I said, stop selling stuff. And it gets very quiet there for a second. But the joke is, once you start selling anything, you open yourself up to chargebacks, because it's human nature, because, of social media. If somebody can figure out a way of kind of scamming the merchant, right? On, hey, you can get your product or service, you can eat HelloFresh for 2 weeks and then get your money back.
I just have one thing for that, Scott. Like,
yeah,
if I sell to an enterprise, right, or someone serious with like good values, I'm not sure that employee, let's say a VP sales, right, I'm not sure they'll ever try to fraud unless they have the CEO's permission. That would be odd, because these guys are like flush with money. So isn't the ultimate solution to go B2B, like I did in the last 7 years of my career?
Listen, B2B is typically far less chargeback laden, not because it's just the B2B, it's the mechanism in which companies pay each other, right? They're not putting purchases, well, some will put purchases on their corporate Amex card, but most of them are invoice, wire, ACH, or check. Now, can you still try to say, hey, this, sure, but those mechanisms are much harder to kind of, go through. So just the function of how companies pay each other, that by in and of itself will reduce the chargeback, opportunity.
That's a huge insight right there, actually. Especially if you're gonna go very high ticket, like, I don't know, 50K or 100K. You recommend that at first there's limits on credit cards, right? You cannot pay like over, let's say, 50K on a credit card. So you recommend?
Oh no, like, you could charge millions on a credit card.
Really?
Like, oh yeah.
Okay.
Yeah, it all comes down to the credit worthiness of the company and the limits on cards. American Express is the usually is the one that is paying. But think about it from the merchant's perspective. And listen, even Visa, MasterCard, once you get over $10,000, right? Merchants pay what's called interchange, right? For Visa and MasterCard, they pay what's called interchange. And all that is a percentage of the sale price plus a fixed fee that goes to the issuing bank of the credit or debit card.
And how
That's how
much is that generally?
there's about 150 different rates. There's a lot that goes into it. But if you kind of averaged it all out, it's around 1.75% plus 12 cents fixed,
Okay.
right? That's average. There's some debit cards because of Durbin Amendment, your regulated debit cards that pay 0.05% plus 22 cents. So on a $100 charge, it's only 27 cents of a fee.
Hmm.
Some cards, like your rewards cards, your miles cards, the issuing banks, right, where they're giving back to the customers, they have to fund those transactions too. So those are north of 2, sometimes 3%. Point being is merchants, a lot of times a consumer might go into a mom and pop store or a deli and they'll say, we don't accept American Express, right? Because American Express, they don't have what's called an interchange. They have what's called a buy rate, a discount rate, and that's usually 2.5 to 3.5 percentage. There's a negotiated thing, but to the merchant, paying 3.5% on a $1.25 pack of gum, it's still a couple of cents, but as a percentage, it's a lot for them to, right? Because their cost of doing business is very high. So when we talk about purchases that are 50, 100,000, 200,000 B2B, will merchants try to pay with an American Express card if they're getting their miles or points? Sure. But the receiving merchant might be like, hold on a second. I don't want to take American Express, at $100,000. Now I'm paying, $3,000 for that transaction. Just wire me the money. I'm glad to pay the $15 or $20. So yes, price point does come into it. B2B versus B2C comes into it. Customer demographic absolutely comes into it. And the last thing that we look at with this is what's called affinity, right? So the product or service that's being purchased, right? Is it something that the consumer has to have, like their electricity or things of that nature, right? Where if let's just say you're on an auto pay. I know with us, we auto pay our cable, phone, internet access. It's on an auto pay, right? As a consumer, am I more likely to charge that transaction back? Probably not, because what happens? They turn off my electricity. They turn off my internet. So there's an affinity but if I'm doing it to say People Magazine, that's a nice to have. My life goes on if I don't read People Magazine this month. So that also adds into whether or not the merchant's product or service tends or lends itself, or a dating site. Dating sites are the prototypical ones, right? You go on, you find the love of your life, and pretty soon the love of your life says, get off the dating site, right? Well, you only have so many months on there before that happens. So, those are not affinity type purchases that are more apt to, at the end, be like, well, I see who's winking at me. I'm done with it. Maybe I'll just, charge it back and get my money back for the last month. That all plays into it too.
Yeah. Again, it's striking to me that humans need to revisit their ethics, people need to think more about stuff in life and their actions, like what kind of humans does that make you? And then you complain about others being assholes to you, like, nope, you're that way too. So, and it's important that
you struck a good nerve before when you were talking about, the demographic of consumer who, doesn't make a lot of money, sees their credit card, said, oh my God, I just spent $200 on People Magazine and Us Weekly. And, oh, I don't have money in my bank account to buy baby food.
Yep.
Like, maybe I should have rethought that purchase.
Correct.
And the sad part is the publisher of those magazines winds up footing the bill because the person just made, I don't want to say a reckless transaction,
Yeah.
but they didn't think it through, and they're looking for some ways to make their money back. And
Yeah,
that's
100%.
part. Yeah, that's the sad
I
part.
can understand that part. And time, and like I said, I had a bad experience with NYC. I mean, it's not horrible experience, and I'm okay every now and then to kind of go through that. And especially if I take the risk, right? As soon as I plug my credit card somewhere, I'm conscious that yeah, shit might happen. So and yeah, Time Magazine, I won't talk about their editorial quality nowadays. It's really weak. I've been reading them on my Apple News, and yeah, it's so bad. And especially the quality of advertisers that they have there. I think that the leading brand right now is Forbes. They still do a good job at the quality of the UX, the graphics, and so forth. That being said, I do understand that it can be valuable if someone charges me back if they need the money more than I do. Like okay, I can give you a donation here and go feed your baby. That's fine.
Right.
Me, it's more like lazy intellectual folks, lazy folks intellectually that just like are like, oh yeah, let's just do it. I don't care, and it's gonna be beer money. But yeah, that's it's been a fascinating convo, Scott, and I feel we could talk for hours and hours.
Sure.
We only scratched the surface here, but I've got like way smarter since the beginning of that convo. So thank you for that. Where can people find out more about you?
Sure. So you can find me on our website, which is payometry.io. On LinkedIn, Scott Tivey, SCOTTTIVEY. And that's pretty much that's it.
All right. Thank you so much.